So we kind of sold off around the world. The Asian markets, not so much. Some of the Asian markets were closed. European markets had a little bit of a bump, but it was a two-sided market. Various sectors were kind of competing against each other, so not much out of Europe at this point. We've got a real busy day between various Fed speakers and economic events. The banks are going to be kicking off earnings season next week. You really want to be thinking ahead on that. Yeah, we'll leave it with that. Let's check out what's on the economic calendar for the day. Let's go to Market Watch calendar. Bring the description over next to the time. Just makes it a little bit easier. If yours is full like this and trying to see where the economic events are, just uncheck everything and then turn on the Econo Day. Dollar opens at 8. The bonds open at 8.20. Then we have 8.30, 8.55, 9.45, 10, 11. So you can see that it's a full morning when it comes to things on the economic calendar. And then, of course, we have various Fed speakers today. So it's going to be a busy one. One thing to note on a day like this is that it's very unlikely to see the market stick in one particular direction. We're not coming into it with a lot of enthusiasm. We're not bearish. It's just been a really extreme run, and the market's kind of consolidating a little bit, building a healing or building a base. So it would make sense that we kind of consolidate here, hang out. We're looking for improvement in the chart more than anything else, right? That kind of language about, like a damaged chart or a chart that needs to be healed, you'll kind of pick that up if you spend a lot of time at the IBD website or maybe over at stockcharts.com. They use that kind of language, that we don't want to see a market moving too far, too fast, making extreme moves, things like that. And so when we get these pauses or these consolidation periods, it's a good thing. So there is a lot going on. It's very unlikely that we're going to stick to a particular thing all day. Go in and kind of game this out a little bit. So from our current location, man, that's a really beautiful trend line. Failed flag setup, continuation, or a reversion. From our current location, we got 3 scenarios, right? We could hold the range for the day, and there's more than enough room for this to be our range, basically from 45.90 to 45.60. More than enough room. It's very unlikely that we're going to see that, but we always want to recognize that it is possible to see that as one of the 3 scenarios. I think the only way that we could see that is if the economic news is just so vague that nobody can really get any clear idea about what to do with it, and they have to get a hold of the nerds and wait for the nerds to tell them what to do. So outside of that, being in that range, Scenario 2 would be that we break to the upside or that we break to the downside. We're already down 0.25%. We've got an ADR of 1.78. Notice the ADR is getting smaller every day that we come in. It's getting smaller. It's a it's a byproduct of a smaller volatility. Each day that the market continues to not make as big of moves as we had been making, the ADR is going to continue to get smaller and smaller until we get back to normal. Right now it's 1.7, so we're barely scratching the surface there, but 12 hours has already gone by, right? If we were going to make a 1.78 move, we would need to have already made a good amount of that, and we haven't. It's not to say that we can't now get caught up and make that 1.78, but it would be extreme. So we can game that out to the downside and say, well, what would that look like if we did start making that 1.78? We'd first need to break our own Globex low, which at the moment, this downtrend is done and we're building a base. So it would take a catalyst to send us below our current low. News, economics, something. The chart alone isn't going to put us in that direction. Should we break that low, we'll start dealing with Monday's price action. Ooh, I almost called it Friday. I don't want to go back to Monday again. While sitting inside of yesterday's price action, we would want to focus on a couple of key metrics, one of them being the Globex high of yesterday, one being the open of yesterday. So that would be 45.50 and 45.40. On the other side of that, the Globex low of Monday would put us at around a 45.25 or maybe 45.30-ish, right around in there. So 50, 40, 30, easy numbers to remember, right? Not a big deal there. Is it too far? Should we measure even farther? Well, we're down 0.25%. If we were to add a 1% move to that, it would put us into Friday's price action. So you can see that 45.25 isn't out of line. We could easily hit that number. In fact, we could go beyond that and it wouldn't even be considered extreme at that point. So we want to go ahead and finish gaming it out. We have Friday's pivots. So there's 45.11, the cog line, and then 4500, the roundy. That would be our downside scenario for today. And if you're looking at that and thinking it's a long ways, man, that's really extreme. It would be. Yes, absolutely. At this point in time, after already having spent 12 hours of this day, we don't have much day left. This would be an extreme move. It would be very fast to make that amount of move in this small period of time. It would not be subtle, right? It would not sneak up on you with a slow grind to the downside. If we start making moves like this, it'll be extreme. It'll be price action that looks like this back here. Very deep, sharp, sudden, extreme, right? So, a little bit of context. If we were to start making these moves beyond 45.40, it will be due to such a violent move. It's worth noting where the volume profile is. So if we come over and look at the 10-day, 30-minute chart, you can see that we are right at a volume level 45.65, 45.70. And underneath that, we have a very shallow area. So what this is basically telling us is if we break our own current low right now, our Globex low, there's really nothing to help us or uh, slow us down in that descent. And we could hit one of the branches on the way down, 45, 50-ish, area, there's a little bit of a volume bump there, a volume node. That's it. Otherwise, it'd be back to the point of control, which is around 45.32. Right. So, it kind of helps to get a little distinction in the volume profile and make sure that when we're drawing these lines, they actually mean something more than just random lines. So that's the downside scenario. What's the upside scenario look like? We could go sideways. We could go down. We could go up. We're getting a little bit of a failed flag play right now. One thing we need to be concerned with is bumping against the bottom in a Busby style setup. But if we were to start making our way back up, what is in the road? One thing would be the high of yesterday. That's the RTH of Monday. Put us right around 45.80. Beyond that, we have our own Globex high of 45.87. And then kind of clear skies with not much up there. We'd have to go back out to that volume profile. There is the round number at 4,600, and then there is the cog line at 4,611. The roundy alone, psychological level, very often builds volume nodes along that area, which we'll check with the volume profile. And then the cog line is just the cog line. It is what it is. So those are two areas without even going anywhere that we can already mark out. It's worth marking, but unrealistic. There's also the near-term high of Tuesday afternoon, 46.30. So from here, we just take it back into the volume profile and look to the upside and say, well, is there anything up there? You can see it's just a lot of trash, right? There's just an absolute mess of resistance. It would be a struggle and a fight to work through all of these levels. Although, if we were to get that break to the upside and we were to start working through yesterday's levels and get out above this current move, you do have to kind of think about what would get us there. It'd be news. It would be some galvanizing bit of information that shocks the market into this breakout to the upside. And in market situations like that, we very easily could rip through that area, through all that trash, right? So it would perhaps look a little bit like this kind of price action. Big candles, extreme moves. It would happen very fast, and then it would likely stall across the top. So that games it out for the ES. Take a look at the Nasdaq. We basically have the same situation right now. We got the algos running it to the downside. Then they were turned off. A little bit of a basing pattern. Getting a failed flag break to the upside. Want to start gaming this out the same way. We've got an ADR of 2.5, and we're only down a dime, not even a 1/4%. It is possible that we hold this range this morning from our own Globex high to our Globex low. We never want to say that things aren't possible, but I can tell you that that's very, 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 very unlikely, right? I mean, that's so unlikely. It's almost impossible, but it could happen. We don't want to say that it can't. So if we don't do that, what would a range day look like if we just expanded the range a little bit? Well, there's a key pivot point from that liquidation break yesterday afternoon at around 15,065. I'd really focus on 75. So that would be very likely our downside range if we were to assume a range day, right? Just a very tight, narrow range. You could look at it as being range bound inside of yesterday's price action, but that's a really, really big range, right? That's a lot of range. So you could think of zone A and zone B, or zone 1 and 2. The first zone would be from that 50.75 all the way up to 15.200. That would be zone 1. And then zone 2 being all of yesterday's RTH. So from the lowest point of yesterday's intraday session, 14.880, up to 15.2 in our own current zone. That would be what a range day looks like, and it wouldn't be considered negative at all. But that does get us tied into what a downside move would look like. So if we were to game out a bearish play in the Nasdaq beyond that range bound morning, then we'd want to focus on how far could it go. Well, we've got a 2.5% ADR. So from our current location where we're basically flat, a 2% move would still be showing inside of yesterday's price action, or at least inside of Monday's Globex area, where we had that megaphone pattern form. 14.9, maybe 14.875 would put us near that liquidation break from the kill zone. That would be our likely move to the downside, but it would take news to get us there, right? We just couldn't make that move without the news, right? It's not going to be a slow grind to make such a dip without something deliberately moving this market in that direction. So it wouldn't be slow or subtle. Very likely it would look like last Wednesday, maybe Thursday, if we were going to make that kind of a move. Taking things in the other direction, since we've already measured out our range and we've already discussed what a downside move looks like, what would an upside move look like? We'd first need to get back above Friday. So I did it again. Above Monday's high, then our own Globex high. If we're looking for even half of our current ADR, then we'd want to look at a 1.25% move. That puts us at 15.325. That's really important because it puts us above all of this stuff from last week. So watch out for 15.275. That's going to be a critical area. Looking at the volume profile, you can see that we're below the point of control, and it's worth noting the point of control is very close to the value area high. Right? We've been slowly moving that volume profile point of control closer and closer and closer to the top of this value area. We're getting closer and closer to that expansion into a new level, or moving back down and retesting these lows. Now, we're not talking about today. This is a 10-day chart on a 30-minute time frame. It would take days to make this move, but we are talking about a serious shift in market sentiment here, that we're either going to get out of this range and begin a new level, right? Enter into a new phase, or we begin to seriously begin moving down back through these levels. Not this wishy-washy, we don't know where we want to go kind of move, but with deliberation, right? We do have the Fed minutes coming out this week. Remember, it's not going to be another announcement. It's just more information on the previous announcement. One thing worth pointing out while we're here, this is the Nasdaq daily chart, and I get it. There's a lot of trash on there. It's kind of hard to see. It's a little bit cluttered. But what we want to focus on is the green and red lines right there. And you can see that yesterday, the Nasdaq made almost the entire week's expected move in a single day. Now we close inside of these boxes at least 70% of the time because these boxes are one standard deviation and that represents 68 point blah, blah, blah. We just round up and say 70. So in any normal market, on a week to week, month to month, day to day, hell, minute to minute basis, you can always do that mathematical formula, run a standard deviation, and ask, well, what is a 70% range, a 70% likelihood distance for whatever time frame I'm on, right? And we're on the NASDAQ on a daily. This is a 1 week daily range. And we close inside of that range 70% of the time. That's mathematically accurate. There are periods in time where we close for the week outside of the box once in a while. Doesn't really count, but repeatedly outside the box 1 week and then another week and then another week, and then it starts to indicate uh, that things are starting to come apart. When the market makers are spot on, I mean they're just nailing it perfectly week after week after week. It's usually in low volatility environments, good clean market conditions. Everything's doing what it's supposed to do, and things work really good. So the warnings start to show up when we breach these levels and close outside of them consistently in a row, back to back, back to back. It really starts to cause concern. If you were to go back and look at pre-COVID in the S&P, though, not necessarily in the Nasdaq, look at how we went into that December, January, right into February, right before the crash. And look at how things started to break apart and we kept leaving the range and closing outside the box, and things just really it was there, right? There was signals saying, watch out, this market is really starting to get extreme. It's why I bumped up my hedges before the crash. It wasn't because I seen some crash coming. It was just because things were getting more violent in a market that had not been violent. And it doesn't cost very much to carry a hedge. So I added up a little bit more, right? It worked out good for me, but you know, it could have easily have been something that was overlooked. And then, you know, the point I'm making here is we made that entire move yesterday. And if you look at what we did in the overnight hours, that last little bump that we got, that is what we call a blow off top signal. One last hurrah before it begins to dump down. You'll see that little signal in any time frame if you just look around for it. Blow off top, capitulations off the lows. You can see we had one back here. Same little thing, right? One last hurrah, one last little push before it just finally gave up the ghost and down she went. Now, I'm not saying we're going to get this move, right? Kind of keep perspective in this. I'm just pointing out that there was a little blow off top. And where did it stop? Well, it stopped very close to the roundy, one of the pivot points we focus on, and it stopped very, very close to the edge of the weekly expected move. Now, that line was drawn last Friday. So, it's not like we're looking back and drawing lines and saying, oh, wow, yeah, that would have lined up perfectly. Would have hell, it was on there since Friday. All you have to do is take a look at that daily chart and ask the question, what's more likely when we get to this line? We're going to stop here and turn around and go back, or are we going to break outside the box? You can see last week we absolutely broke outside the box. We didn't stay outside the box because we close inside of these boxes more than, well, for the NASDAQ, at least 70% of the time. When we're talking S&P, it closes inside the box more than 80% of the time. It's way more accurate than any other product out there. And it's about to go to 5 expirations a week, which is going to basically take its accuracy and double it. And I mean, this thing is going to be the most accurate expected move out of any product in the history of the marketplace because we've never had 5 expirations in a week before. They don't know the ramifications of having 5 expirations in a week, which is why they're going to experiment with it first before they allow it to go into other products. They experimented with SPY and 3 expirations a week for almost a decade, right? Slow movers, they don't just react and respond to things. They're just slowly testing, fiddling with the options market, trying different things to see what works. So we've gamed out the futures scenarios for the S&P and the Nasdaq. I'm going to continue to point out that when it comes to futures, guys, it's so much more than just the S&P and the Nasdaq. If that's all you're trading, you're trading very short-sighted. And if you're struggling to trade in those markets, maybe because you're using a small account or because you come from a swing trading style system and you're finding it hard to day trade in those futures, there are new futures products out there. These new futures products are amazing. Now, they're not super liquid yet, so you really wouldn't want to day trade them necessarily, but they are really great for swing trading. They use small account metrics, so you don't have to have hundreds of thousands of dollars to trade these things. They're called the Smalls Exchange, and they're made by Tasty. If you don't want to trade those, say you've already got a Tradeovate account or a Ninja account, there's the FairX, FAIRX, made by Bloomberg. So Tom Sosnoff came out with the smalls, and Bloomberg said, "That's genius. I'm going to do that." And they ran right out and did the same thing. Oddly enough, since Bloomberg has a greater reach than Tom does, the Bloomberg FairX products are more liquid than the Smalls Exchange. So, either one, it doesn't have to be one or the other. I trade them both, but these are new products, right? We're talking about new futures products, much smaller than even the MES or the MNQ. They're smaller than that. They don't trade at night, so you don't need a larger buying power to be able to hold them into the close. They're literally designed like an option, but they're a futures. So no PDT, you don't have to worry about waiting on cash settlement. There's a lot of products out there. They even just recently came out with these new nano products, but I don't think we can trade nanos yet. Webull is showing the new S&P nanos already on their site, but you can't trade them yet. And that's like a micro option. Yeah. Again, experimental stuff, right? New products, new things. So don't feel like you have to trade the NASDAQ or you have to trade the ES or you have to struggle, especially with the small account, trying to trade those things that you might think is just difficult to trade. Don't do the hard stuff. Do something easier. I like these Smalls Exchange because they offer me exposure to markets that I normally wouldn't be able to trade, like oil. Oil's a very big contract, right? It's $1,000 for every 1 point move in the market. That is just really big for an account like mine. Well, I can trade oil here. They've got cryptocurrency futures. If you try to trade Bitcoin, you need a really big account to trade Bitcoin futures, but not here, you don't. Cannabis futures, 3 different bond futures, the 30, the 10, the 2 year, the US dollar, precious metals. So they don't have a gold futures and a silver futures. They just have precious metals futures. They have a new version of a Nasdaq and a new version of the S&P. So a technology futures and like your broader market uh, futures product, just new products, right? Absolutely worth looking into. Depending on your broker, you may not have access to them, but definitely worth something to consider, especially if you're trading on Ninja or Tradeovate. Then the Bloomberg version of those is worth looking into, right? They've got micro, large caps, and then micro super tech. This would be like a new version, again, a new version of Nasdaq or a new version of the S&P. Only it's not the Nasdaq and it's not the S&P. If this seems kind of interesting to you and you want to check it out, I'm a little bit of a nerd, so on my own, statistically, I just always dig a little too deep. You might want to know, well, what's in this thing? It's a basket of stocks. It always is. What's the basket? What's the names that are in there, right? What are the devices that develop the weight that is in this thing? Because the more you understand something, the better it is so you can trade it, right? When we trade the ES futures, we know what the hell that is. It's the S&P 500. We know what's in the S&P 500 because we've seen the list. We know what runs the S&P 500 because it's the FANG names, right? So the more we understand something, the better it is that you can trade it. You can get that weekly expected move indicator from the Discord that I built that is full of Thinkorswim indicators. So join the Bullish Bears, come into the Bullish Bears Discord, and scroll down to where it says Traders Resource Zone. Open it up, custom charts, custom scripts. Either one of those has the link in it. Just kind of scroll up. Hey, another weekly expected move discussion. Just keep scrolling up. Thinkorswim workbook. That's the Discord that you want. If you go there, you'll find the weekly expected move and about 1,000 other indicators that I've gathered, collected, and or made and put them in there. If you're not a member of the Bullish Bears, too bad. Join our group and come get it. So let's take a look about what else is out there. You can see we had a significant move in oil, and now it's kind of giving it all back. Look at that very choppy topping pattern, right? The VIX completely decoupled from the dollar, which is really important. We always just want a quick glance at those two, make sure that they're not correlated at all. Notice that the S&P and the 30-year bonds look very, very similar this morning. Stocks and bonds doing the same thing. Ooh, that's weird. All right. We don't like that. We don't want to see things doing something that it's not supposed to do. So let's keep our eye on these and look for these two to decouple from each other. We want to see things go back to normal, meaning we see a rally in the S&P and the bonds hold steady or even fade off a little bit. We don't want to see a rally in the bonds and a rally in the stocks. And that's, quote, stocks is just our generic term for looking at the Nasdaq and the S&P. We don't want to see the bonds and stocks doing the same thing. Gold's kind of holding that line. That white line right there is one of the voodoo lines. I don't know how voodoo lines are developed, which always makes me a little uncomfortable using them, but it's there. The market is most definitely responding to it. I have this sneaky little suspicion that those are hand drawn because you have to update the indicator from time to time. You wouldn't have to do that if they weren't going in there manually making adjustments to those lines. And that just makes the whole thing even more uncomfortable. Bitcoin had a significant rally off of those lows, and then it just stalled out. Again, another topping pattern, but different than in oil. You see how oil is expanding more and more, just like they talk about in the strat, STRAT, the strat. It talks about expanding topping patterns like this, and that's not what we have in Bitcoin, which is more compression based. We're going to come out to the higher time frame for just a moment. We're on a 1 hour. just to point out what our range is right now in the bigger picture, in the grand scheme of things. We're not done yet. Now, one thing that I will point out that has really been bothering me in the last few days is how much the media is telling people about the inverted yield curve and how we're going down, and they've highlighted, you know, Morgan Stanley and Goldman Sachs saying that the bear market rally's over and we're headed to the downside, and that none of this, there were all these doom and gloom and warnings about short the market, stay scared, we're not done, we're going to revisit the lows. And statistically, they're wrong more than you're wrong. And if you're thinking, yeah, but I get it wrong all the time, they get it wrong more than you. Right? Every time the media says this is the best time to buy in the world, we should all be going out buying. Oh my God, start selling. Right? And every time they start sounding the alarm and we're headed down and it's all doom and gloom, keep buying. Now, I don't want to tell you that go out and buy, but take what they're saying with a grain of salt, because statistically they are wrong way more than they are right. And the more that I hear all of them pushing the same theme, sell, 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 while we continue to see days like yesterday. Did you look around yesterday? At first, I thought it was just the crappy names, right? The little uh, small caps and stuff that's just beat down junk, but it didn't stay that way. Through the day, we started to see some real solid mega market cap names making some really big moves yesterday, right? And they were all trend line breakover plays, just like right there, that 3-bar trend line breakover. There was what Netflix and Amazon, and quite a few of them had this very bullish trend line break play. So turn that MSNBC junk off. Use the charts. Trade what you have. Don't let them people get into your head and make you think that we should just all be bearish and run this thing to the downside. You have a million reasons to be cautious. By all means, I'm not saying just go out and buy everything and throw caution to the wind. I'm not saying that. But we can hedge our trades. We can be long without being exposed to a lot of risk. We can trade responsibly and diligently, right? So just my 2 cents. I've really been noticing the theme in the last week or so. They're really bearish, or they're really just hammering that drum of caution. And I don't know, every time they do that, they're just wrong. They get it wrong so many times that if they're right this time, it'd actually be a surprise. So we're looking at the S&P 500. We want to filter it down to 100 names, which is really difficult. I got it to 107. Feel pretty good about that. That was a nice shot. I adjust the multiplier just so the color scheme pops a little quicker. So you can see how Apple is still gray, but Apple is only down, 0.04. If it was to go just a little bit farther, 0.05 or more, then the color would start to change. So that's all we did. We just changed the multiplier to a decimal point instead of a whole number, right? And that just makes the color show up sooner. So you can see that we're in a risk off situation. We have more red than green. We want to look around and ask, well, what sectors in this start to stand out? Well, the FANGs are easy to spot because they're all these mega market cap names. They're the ones with the really big box. Tesla, Amazon, Apple, Microsoft, Google, Facebook, Nvidia's in there somewhere. Right there. There it is. So we want to follow up with that question, what's moving in the pre-market? Notice things that were down yesterday, like Texas Instruments, are up this morning. Makes perfect sense because it's linear regression. It's mean reversion. Yesterday, Texas Instruments was down a lot. Today, they're up a lot. Yeah, imagine that, right? This goes right into why a lot of times I'm entering new trades as the market falls. I'm going long. and I'm getting out of those longs as the market is rallying, right? I don't go short while the market is falling, and I don't go long while the market is rising. Flip that over and go the other direction, right? This is exactly why. Same situation. It doesn't always work, of course, right? Nothing always works. We do have the earnings season kicking off next week, and it always starts with the banks. So you really want to keep your eye on those things. Yesterday, it looked like we had a number of opportunities. They didn't really follow through as well as we've been getting, but since mid-January, it's been energy and banks for me for day trades more than anything else. Energy and finance, energy and finance. They're cheap, really liquid options. Those things have a really great beta. I mean, these things move day in and day out. It's been play after play. So, you know, focus on what works. I get it. We all want to trade, Disney and AMD and the tech stocks, but step away from the crowd. Look at what else is out there. So we're looking pretty negative this morning. Not extremely negative, right? It's just this flat, kind of wishy-washy morning where everybody's just kind of waiting around for the economic news to come through. Just take a look at the Nasdaq 100. We don't need a filter here. It's already 100 names. We just want to change the multiplier a little bit so we get that color scheme. So when we talk about highs and lows, it's worth noting if that's RTH high and low or Globex high and low, right? So if you go back and watch previous versions of the morning briefing, you'll notice I'll say yesterday's high intraday, or I'll say yesterday's high, yesterday's RTH, or yesterday's Globex. So you do want to make a distinction when you're talking about previous days levels. Is it previous days RTH or previous days Globex? They're both important, so it's not like you want to just pay attention to one and not the other. So looking at the Nasdaq 100, we're in a risk on, or excuse me, we're in a risk off situation. We're bearish. We're not negatively bearish, like really bared up, ready to short this market. It's just kind of flat, kind of a little wishy-washy, not a whole lot of direction or momentum in here. Looking for the peer groups. We want to be able to articulate consistently what kind of morning are we looking at? How bearish are we? How bullish are we? Because what the idea is with these pre-market briefings, there are 4 very unique trend days that exist. And I'm not talking about a market with a little bit of trend in it. I mean, they're very specific days. Just like a flag is specific, or a head and shoulders or a rising wedge is specific, there are 4 very unique, very specific trend days. We can often spot them in the pre-market before the market opens. So imagine that. The bell rings, you already know, or you're really certain with a high degree of certainty that it's going to be, quote, one of those days. And we just rip in that one direction from 9:30 to 11, making a 3% move on the day in the S&P or in the Nasdaq, and that it's one of those, right? And on one of those, you have 90% of all of the S&P or 90% of all of the Nasdaq all moving in the same direction at the same time. That you can literally go in and pick just about any company in the Nasdaq and buy a 35 delta option. We call it the alpha protocol. That you could just across the board, you could just buy into everything with 10-cent options because it's one of those days. It's a chance to make an entire month's worth of day done in a single day. That's what we're looking for in the pre-market. Now, on most days, we don't get this, right? So we do the other stuff. We look at what's going on overseas. We look at what's going to be on the agenda for today. We look at, the economic events, who's going to be speaking, anybody that's got earnings, and we get ready for the day. And we try to narrow down the list, funnel our focus into 2 or 3 good names, and we get ready for the day. On most days, it's not one of those days. But when it is one of those days, Once you've already gotten used to doing this kind of work, those days really stand out. This morning, for an example, is flat. There's not a lot of excitement, not a lot of names moving. We can use the tool here, the screener, and say, well, how many names are up in the pre-market? At least a half of a percent. How many names are up in the S&P? 3. Okay, we're definitely not having one of those days today. But if you had come in and said that 75% of the S&P was already up 1% this morning, that would be really bullish, right? That would be it'd be one check mark into saying, hey, this looks like it's going to be one of those days. I run a coaching service, and one of the first things that I teach, it's the first post in every new client's channel that they get into. It points out the trend day homework. It's that valuable, it's that important. And even if you don't trade it, just recognizing that there is such a thing can help you in so many other things that you trade. It's an absolutely invaluable perspective in the market. And they are very specific days. And you don't need me to teach it to you, just like anything else that's out there. If you're willing to do the work and take the time, you could do it on your own. You can find it. I have started to teach it in the bullish bears. We had a couple of courses in the daytime when things were slow. Um, so, the information is out there. This is a really muted morning, guys. We're all waiting on that econ. So that's what it's going to be today. We got the econ. We've got Fed speakers. If you look at the sectors this morning, most of the names in here, most of the sectors are barely up or barely down. Bitcoin's up 2%, natural gas, and a little bit of energy, the USO, the oil. But other than that, it's a whole lot of sideways, a whole lot of not so much. Certainly want to focus in on the sectors list that we were just looking at is more of the legacy stuff, but we want to dial that in a little bit and say, well, what about the electric vehicles market? What about that sector? What's going on over there? Well, we've got basically nothing, right? XOS, NIO, and General Motors. Li Auto just barely across the line saying, well, it's moved a half of a percent. It's just barely worth looking at. So not a whole lot of fireworks and firecrackers going on over there in the EV market. What else we got? Crypto market. We know crypto's doing good, right? We just seen that. So what names in the crypto market are doing good? Now this crypto list has not crypto names. These are companies that own a lot of Bitcoin or they are heavily vested in the blockchain. And you can see that a lot of these are flat or just down, but names like Riot and Mara, Bido, right? Bido's that new Bitcoin ETF. So crypto's up this morning. Electric vehicles is basically flat. What's going on with the pot stocks, right? You go over and we look at that, try to break it down, find some opportunity. That's got a whole lot of sideways or flat, one or two names that are down more than 1%, one or two names that are up more than 1%. Cron, for an example. Such a fun little thing to trade. I love Cron. Continue to watch the news as we get closer to the open. Take the steps that we've taken this morning and do them again when we get closer, right? The whole idea of these morning briefings is to teach you guys how to do your own morning briefing so that you get to the point where you don't need me anymore, right? So we've already done it. You would want to go back and do it again as we get closer to the open, as we see the econ coming in and have a better prepared process for what names you want, right? You want 2 or 3 top line names that you're ready to go. take those names on the list and take them out to a daily chart. There was a name I was going to bring up. Oh, I remember what it was. Someone was asking about Lucid yesterday. Now, I remember we just looked at the EV market. But yesterday, going into the close, we started to prime up for a trend line breakover. So, this would be something I would be looking to watch this morning as we came into the open. Compared to its peers, this thing is beaten down. It's got the 3-bar play with the inside day of yesterday. We're looking for an inside day breakout and a rally back up to these 3 previous levels. If you're wondering what the play looks like, well, here's another example of the same thing, right? Faded off, found the base, had the trend line breakover, rallied back up. Sometimes it's just a 1-day play, which is fine because we're day trading, right? We're not looking to make an investment in this thing. You know what it looked like right back there? Same thing, right? Exactly the same play. So when you're making your list in the pre-market and you're trying to figure out of all the names that you keep coming across, well, which ones am I going to focus on as we come into the open? Go out to their daily chart and see if there's anything out there that says, I like this one better than another one. Does it have this setup, a trend line breakover? Is it an R2G, right, which is a red to green trade? Is it an IX10 or an inside day breakout? Is it breaking the 52-week highs or 52-week lows? Is there something more than just, oh, well, it's moving in the pre-market? Because if, quote, moving in the pre-market is what you're looking at, you've got 1,000 different names out there to look at. That's worthless. Right? You got to narrow that down. Funnel the list down to 2 or 3 manageable names going into the open. Have a good morning, everybody. Be careful and be safe. I will see you all.